How to make money in the stock market, avoid the noise. In today's video we discuss why investing in stocks is the best financial decision, as it offers higher interest rates than any other type of investment. But how do you make money in the stock market? Before we start, appreciate this video. To support my work. First, remember that even though so-called financial advisors and brokers may seem complicated, since their main goal is to make money with high commissions, investing is simple. With the right knowledge and experience, anyone can make a successful investment. If you find the video you watch useful, we invite you to subscribe to our channel and support us with a donation. Your help is precious to us and will allow us to continue producing quality content for you. You can do it here below, through the appropriate buttons, subscribe, and thanks. What are stocks? Stocks, simply put, are ownership in a company. A company raises the money it needs to operate by selling parts of the company, and this ownership is called stocks. Investors who buy a company's stock are called shareholders. Most companies, like Facebook, raise capital by selling shares to the public. The shares are traded on the stock exchange and can be bought and sold by anyone. The first is to make a profit, called a capital gain, when the stock price goes up. The second is to receive regular payments from the company's profits and cash flow in the form of dividends. Dividends represent a relatively small portion of stock investment returns, and only a limited number of securities pay dividends. It is market forces that determine the value of stocks. In other words, how much people are willing to buy and how much they are willing to sell. So if there is great demand after buying a stock, it is likely to get a high return. If this return remains positive in the long run, the company will start generating income in addition to the previous returns. However, it is wise to invest now rather than later. The sooner you invest your money in the stock market, the sooner it will start working for you. This is true for all investors, but it is especially important for women, who tend to live longer but earn less than men. Liz, a tech executive in America, received a large settlement from her company after years of lawsuits for wage discrimination. Liz was so pleased with the settlement that she deposited the check in the bank as soon as she received it, essentially forgetting about it. In other words, instead of earning a 7% annual return, she got next to nothing, since the interest banks pay on savings accounts is only a few percentage points. This story is doubly sad. Because after Liz's salary was penalized due to the company's discrimination, her lack of investment knowledge led her to make a decision that could hurt her financial future. No one can predict the future, but history tells us that stocks are the safest way to achieve a relatively high return over the long term, regardless of market uncertainty. The best thing to do is start right away, even if the investment is small. Of course, history changes and this trend may not last forever, but what are the odds that it will last during your lifetime? What will it take to reverse the long upward trend in the stock market? One of the most frequently asked questions from those who want to invest in stocks is, what if there's a pandemic? If something serious like a pandemic were to happen, I'd worry about my portfolio. If something serious like a pandemic were to happen, I'd worry about my portfolio. Instead of worrying about a pandemic that could wipe out the value of your safely accumulated funds, why not be optimistic and invest in stocks? Even though every investment is probabilistic and no one can predict the future with certainty, investing in stocks is much safer. Sure, in the short term you might lose money with stocks, but if you're watching this video it's because you're interested in the long term. What will you have when you retire? How will you finance your life goals? How will you provide for your family during retirement? Instead of looking for stock tips to make money fast, they're probably looking for ways to change their approach to money in order to change their lives. In other words, an investment portfolio is a long-term project, and that's where stocks come into play. And the longer your investment time horizon, the sooner you invest, and the longer you can keep your money invested, the more important stocks should be. Another question people often ask when wanting to invest in stocks is, the stock market is already at a high point, so what happens when it stops rising? There have been pauses in the market in the past. However, the upward trend has always continued. When you buy a company's stock, you're betting on its success, that it will continue to offer new and unique products and services and be profitable. Companies are constantly failing, but you're not investing in a single company, but in the market as a whole. Plus, publicly traded companies don't stop being innovative and productive. Investors expect future profits, or, if they materialize, they will end up buying stocks and drive up the stock price. In short, as long as we don't collectively decide to stop being innovative, start new businesses, invent new technologies and design new products, we can make money in the stock market. However, there are a few things to remember about stocks. Anyone who has been exposed to investment advice has heard phrases like, buy low and sell high, or has heard investors boasting about making millions of dollars by selling stocks just before the market crashed and rebuying after the price dropped. After all, if a stock's value changes in a way that devalues it, it makes sense to try to maximize short-term profits using this strategy rather than taking losses. However, the reality is that despite the talk and experience, those who try to maximize profits by timing the market are right only 50% of the time, if that. This means, of course, that they are wrong 50% of the time, if not more. In other words, it's a guess. To make money in the stock market, you have to participate in the stock market, just like in any other relationship where you want to make a long-term profit. Yes, the stock market is volatile on a daily basis, but you need to stay focused. Investing doesn't have to be complicated, and anyone can be successful, regardless of income level or prior market experience. In fact, the more complex an investment strategy is and the more it pursues short-term gains, the more likely it is to lose money in the long run. At the same time, loving money is neither selfish nor superficial. Loving money means loving financial independence and the freedom to choose the life you want to live. It means loving your life and wanting to make the most of it, instead of always thinking, what if? Loving money also means that, as easy as it is to find excuses, investing in it and knowing how to properly manage and control it is crucial for your and your family's future. Loving money means loving yourself, respecting the effort you've made to earn it, and making sure that effort isn't wasted. This concludes the topic. I hope this video has answered all your questions about stocks and investing. If you have questions I haven't answered, please leave them in the comments section below. What was your experience with the topic covered in this video? Tell us about it in the comments, we are curious to know. And if you have any doubts or questions, don't hold back. Leave a comment, even just a simple like would be perfect, but most importantly, subscribe to the channel to stay informed about upcoming releases.